What's up, everybody? Good morning. Welcome in. Get this thing going here. Hope you guys are doing well. Good morning. Good morning. Let me know who all's here in the chat. Good morning, Nicole, Mr. Endy, Legacy. Good morning. Good morning and good day for those across the world. Let me know in the chat where you guys are tuning in from today. Here on Chart Fanatics Live. From Germany, we've always got a number of people coming in from Germany. South Africa, welcome in. Good morning. Tendra, good morning. Nice to see you in here. From Kenya, good morning. Welcome in. So we'll get into analysis today. I'm filling in for AB today. Hope you guys don't mind. So we're going to go through analysis. If you haven't traded on here with me before, I primarily trade the S&P and the NASDAQ. I trade based on supply and demand and order flow. So consider myself to be a tape reader. Right, so I do analysis based on charts and volume profiles, come up with key areas, support and resistance, supply and demand, things like that. And then I execute trades based on reading the order flow in real time. So you guys will get a little bit of a look at that today. So we'll get that going here in just a minute. But first, before we get into it, quick thanks to our sponsors of the channel here, Prop Firm Trader being one, TradeZella being one. Make sure you check out the discount codes here if you guys are interested and in need of those products. I think we have some pretty good discounts going on as well. Code PFT on Prop Firm Trader, Apex, and Alpha Capital as well. Latte is ready to go, Tendra. Yep, got my iced latte. Still rocking my Christmas cups, a little gingerbread man. Iced latte is good to go. So let's see here. We'll get into it. Big update as far as Apex goes. If you do trade with those, you can use code CF. 90% off right now. And they've had a big update into overhauling their whole program there. So make sure you check that out. All right, so let's get into it. This is Bookmap. This is my preferred order flow analysis tool. I also use things like footprint charts and volume profiles. So we'll get into the analysis of what I'm watching out for today, where and why. It's going to be very important to stay patient today. Let's take a look quickly at the economic calendar. We do have more high impact news coming out in just a little bit. At 9:45, we have manufacturing PMI. And then at 10, we have ISM manufacturing PMI, ISM employment, ISM manufacturing prices. So all things that can spark higher volatility. We also have President Trump scheduled to speak today after market close at, I think, 9 p.m. tonight. So when there's a big news event like that upcoming, I often am mindful of that, especially going later into the day. We could see volatility be kind of high, right? Because the tape might be thin, right? We can have kind of choppier, thin tape conditions. You can have sporadic moves, right? So I'd watch out for this kind of impromptu speech planned by President Trump, right? So lots of things to watch out for. I think there's already been some statements put out about, what's going on with Iran. That's been a major theme in the market. That's kind of driving volatility and price moves. So anytime headlines come out around that, Trump put out a statement just 20 minutes ago on Iran, something about Iran. I'm looking at the news headlines right now, guys. So it's they'll consider the strait is open and free, potential de-escalation, but then until then, we're going to keep bombing them. I don't know. There's headlines coming out sparking volatility around Iran. So we need to be very mindful of that. Make sure you are adapting to the higher volatility conditions. And often what that means is make sure you are adjusting your position size and trade management accordingly. I know for me, in these higher volatility conditions, I typically size down. I always have hard stops in. Even if I'm manually managing the trade, I still have a hard stop in for safety, a few points, because if something crazy happens, market moves fast, I may not even be able to exit quick enough. So I always have hard stops in. Somebody asked a good question. Justin, he said, what percentage do you have your volume profile set to? 70% or 68%. I think it's 70%. Yeah. Good question. So we do have giveaways today, guys. So those giveaways will be selected based on participation in the chat, asking good questions. If you guys want to connect with me and ask questions, etc., make sure you're over in the Chart Fanatics Discord. That's a free resource. I'll be posting screenshots and things in there of analysis and things that I share here in these live streams. So make sure you check that out, as well as Chart Academy is a great new resource that's coming out for free trading education. So make sure you get on the wait list for that. It's releasing very soon. So make sure you sign up for that as well. Good day from South Africa. More people from South Africa. I normally trade on Chart Fanatics Live on Fridays. That's correct, Nunya Biz. But today I'm filling in for AB as he had other urgent matters to attend to. So I'm filling in today, and normally I am on Chart Fanatics Live on Fridays. Glad to have you. Thanks. Glad to have you here, Nunya Biz. So like I was saying, for those of you guys that are asking good questions and participating in the chat, you may be selected by the team in the back end to win the giveaways that we have today. Let me just confirm with the team what giveaways we do have. Yeah, Justin, as far as I'm tracking, I will still be on the channel on Friday as well. No, I haven't gone through technical analysis yet. Just about to go through that right now. So let me pull up a screenshot of my charts here. I like to go through higher time frame analysis first to kind of get a picture of the overall conditions and location, things that's going on, right? So the main thing that I've been watching recently is just how the market has been ES, right? This is a daily chart on ES futures, contract adjusted. All right, so we've been, the market sentiment has been heavy overall. The market theme has been pretty heavy with the news around Iran, although we haven't seen like the major like waterfall, like capitulation type selling. We kind of did here, but not too much. We've been respecting this channel pretty well as we've kind of grinded this way down, right? So there's definitely sellers are in control. The theme has been moving lower, especially the heaviness economically around the Fed potentially continuing its slowness to raise rates, right? Inflationary concerns, etc. So economically, heaviness in the air, as well as what's going on with the US and Iran, also having heaviness. So I've been watching this channel that the market has respected really well. You can see how we've had multiple tests here at the extremes of it, respected, and also at the highs just repeatedly, right? So we continue to make lower lows, lower highs. Now the couple key higher time frame levels that I've been watching is one, these lows just here under 6,400. You can see the reason is one, we've got like a triple bottom here where the market held this area, and this was the last kind of major basing period that held before we made a new kind of all-time high push. And that was really kind of the last major all-time high push. Then we went into this multi-month period where the market was very sideways from November all the way kind of going into February. And now we've kind of broken down from that, but almost like controlled demolition in this channel moving down, right? So this was that last major area of support right around these lows, right? And we came and tested that, and that also conveniently coincided with the lows of this channel that we've been in, right? So double confluence there as far as context and location. Now we blasted off that. I think we tested that overnight and kind of blasted off of it. And we've pretty much continued that rally all week until we've gotten to the highs of this channel, right? So that's where I'm kind of observing things. Now you can see this last area here where all these wicks, the market based here for quite a bit of time before we sold off pretty aggressively. So I'm viewing this as kind of a supply zone here that we're testing, and this kind of supply zone also coincides with the top of that channel. So we're kind of at a key resistance area now. Overnight, we continued yesterday's rally right into this key resistance area. So it's a little bit of a rock and a hard place for me. Like one, I don't want to necessarily be too eager to go against all the buying momentum that's come in. But two, I also don't really want to chase the market long right up here at the top of these channels, right? So I had a pretty solid week so far this week. I'm continuing to be very, very patient and wait for key opportunities. So I did confirm with the team, by the way, on the back end, we've got Apex account to give away, Alpha Capital to give away, and 3-month TradeZella subscription to give away. So make sure you stay tuned and ask good questions, participate in the chat, and you guys may be selected to receive one of those. I will drop these screenshots of the analysis that I'm talking through in the chat. Make sure you check out the Matt Owen channel on the Chart Fanatics live Discord to see the analysis if you'd like to review that from me there. So I did see a good question that I wanted to answer. Dajir asked, what's your process for evaluating whether you trade NQ or ES on any given day? So I am primarily an S&P trader. I do trade the NASDAQ as well, but I would say my specialty and most of my experience is trading the S&P. However, I'm always doing analysis typically on the NASDAQ as well for confluence. And I do still trade The NASDAQ, sometimes the setup just sets up cleaner. That's one thing. There's just a cleaner level, cleaner confirmations, etc. on the NASDAQ. So I'll just take the trade on the NASDAQ. Another big thing is when volatility is very low and their opportunities for A+ trades are kind of few and far between, then I'll start looking at the NASDAQ more. For one, it's just more volatile in general. So if ES is super grindy and low volatility and there's better opportunities on the NASDAQ, then I'll look at that. The other reason may be relative strength or weakness. As a short-term trader, I like to be trading the leading instrument with the direction that I'm looking to trade, right? So if the market is moving down heavily and the NASDAQ or the S&P is leading, typically my intraday trades are better done on the leading instrument. And this is not a new concept. This is a tale as old as time. This is something that I learned in the book, The Studies of Tape Reading. It's like a 100-year-old book. It's one of the OGs, and it's a foundational element to my trading. But they talked about in that book is the importance of being with the leading instrument, not the lagging instrument, right? So, and one, there's a few different reasons for that, but it could be entries for one, right? You might have a stronger, more immediate reaction with your entry at a good level, playing the leading instrument. Whereas the lagging instrument may chop and grind and kind of chop you out of the position, even though it does eventually kind of go that direction and follow the leader. But as a short-term trader, it typically works better to play the leading instrument. And the other thing is for confluences, right? If one instrument or the other is leading and that instrument comes to a key reversal point, key resistance point or support point, and starts to reverse, and then that relative strength or weakness flips, that's a very key indicator as far as looking to potentially find a reversal in the market, right? So there's a few different reasons why I trade one or the other. However, I would say for the majority of the time, I primarily trade the S&P. Any books that you trade for volume profile analysis? Honestly, a lot of what I got conceptually was from studies and tape reading. And I kind of applied that experience in the real world with analyzing volume profiles to come up with what I do. So I don't have a specific guide. Most of what I know has just come from personal time and experience with just kind of foundational concepts from like studies and tape reading. All right, so speaking of the volume profiles, let's take a look because we've got about 11 minutes till the market opens. So just circling back here, a couple things. One, we have this major area of support that aligned with the bottom of this channel. The market bounced off. We have this area of nearest kind of major resistance that formed this last supply zone that also aligns with the top of this channel. We just tested that on that spike over in the pre-market, so a new spike, right? So we kind of hit this resistance area and this aligned with the supply area. So let's take a look at the volume profiles here on ES, the S&P 500 futures, and see what's going on. So you can see here, when we came down to these lows, the market was, you can see, building volume lower and lower, right? Typically we see volume built lower and lower on trending directional moves. That makes more wavy volume patterns, right? So we were seeing wavier volume profile patterns as the market moved. However, we attempted to break one more time, and look at this volume tail here. So lack of participation on that attempt to break the market lower, and then large aggressive buying, and we've seen the volume shift. And now we're kind of building volume higher and higher as the market is kind of shift directionally back up here, right? So what I'm looking at here is these couple areas around these key spots from the technical analysis that we talked about. So for one, we have this large low volume area here on the breakout of 6,500, which is just kind of a key whole number there. And typically when you see a low volume node like this, / fair value gap, right? So you can see a low volume node here from a volume profile perspective. See a fair value gap here where we had, this basing period and then a large rally. This is a 30-minute chart, by the way, forgot to mention. I like 30-minute charts or 15-minute charts for my kind of daily volume profiles. So this is an area where buyers were super, super aggressive. I think this happened on some news yesterday, but buyers were super, super aggressive and the market traded higher so quickly that not much, it didn't spend much time there. So not a lot of volume could be transacted there, right? Similarly to what happened down here, right? So very, very aggressive buyers. So if the market pulls back into here, we want to see, do buyers support this again? And do those aggressive buyers still have intent to defend, to buy aggressively at that price level, right? So everybody that wanted to go long on the break of 6,500 that didn't get the opportunity to because the market traded so high, so fast. If we pull back in here today, do those buyers defend this spot, right? So this would be a key area to watch, especially because it came following a basing period or all this volume was built. We had prior day highs here as well. So that was the break of prior day highs. So we had a lot of volume built here, break of prior day highs, aggressive break of prior day highs that left a low volume node, right? So key downside to watch here around this plus or minus a bit, 6,500. Kind of, I'm watching kind of the whole area between like 6,490 and 6,520. Kind of a bigger area, but we'll see what happens on the order flow if we trade down there. Now to the upside, this was that supply area that I talked about, right? You can see all that volume here that had kind of a bell curve. The market was balanced here, and then we broke down aggressively from that. So I look at that as a supply zone. Let me do this in red because it's sellers, right? So we had what I would consider a supply zone here, which was a consolidation following, that was followed by a strong breakdown. So looking at the zone here, if I extend this over, you can see this is kind of where we rallied into. And that's that supply zone that I talked about between like 6640 to 6660-ish, right? Key supply zone there. That also aligned, I don't have it drawn on here, but it also aligned with that channel trend line that we've been watching on the daily chart, right? So that daily trend line channel high that we've been talking about, where we've been making lower highs, also kind of came right through here. So we ticked that as well. So that's a key area to the upside. Now, a couple things that I'm watching for going into today is, one, we're kind of building a good amount of volume up here. The market spiked up here in the pre-market. You can see the volume tail up there, right? So not a lot of volume acceptance on that pre-market spike up there. So that could signal a reversal from here, which also aligns with the top of that channel. So if we pop back up here and make a lower high and we see exhaustion from buyers, then I may look to take that short, especially because it aligns with the supply zone, the top of that channel, this exhaustion spot here where we tried to rally there in the pre-market and failed, right? So if we do pop up here and I see exhaustion, especially in the first 30, 40 minutes here this morning from buyers, then I may look for that top reversal, probably just targeting a quick drop towards 6,600 first, then maybe these overnight lows, value area low, yesterday's point of control. So a few different key levels in the near term. If we break through those, then I don't really see much from stopping us from testing. Oops, didn't want to get rid of that. I don't see much from stopping us from testing this low volume node area that we broke out of 6,500 on. So the other scenario that I'm watching out for is, does the market just kind of stay balanced now in this range? You can see a lot of volume here around the point of control from yesterday, which was right around the close, right? So do we kind of defend prior day close and also overnight lows area and kind of balance here for a bit, right? Because there's a lot of aggression from buyers and there's a lot of resistance from sellers at this key spot. So we could see the market just balance here. And if that's the case, then I may let this kind of initial balance develop this morning and see, after like 10:30 or so, if we have just kind of mean reversions around this range, kind of around 6,600, 6,610 area. That's another scenario. And then the last, finally, scenario, and I don't love this so much, and I'll tell you why, but if we do drop down here and we see a significant defense from buyers, I may look to take that to the long side, just, probably more for a scalp. But I don't love that scenario so much because, one, the market is downtrending overall. Two, this is in the middle of that higher time frame channel, right? So this could be a scenario. I'm not going to say no. I just want to see really good confirmations for it, and I probably will just scalp it for a base hit if that develops, right? So it's kind of counter trend. The market is downtrending right now, and it's in the middle of that higher time frame channel. So I'd rather potentially look at this area as like a target if I get a short setup. All right. So that's what I'm watching out for here. The other thing is I've been super, super patient. It's a new month now, April. So happy April. But March was a good month overall for me, performance wise. I was mostly sized down, so not trading with big size in March. But it's been very important for me in these conditions to stay very, very patient for good key levels, and good confirmations. We've seen a lot of imbalanced moves occur on news headlines and things like that, but we've also seen a lot of periods where the market is like choppy and whippy, which has made it difficult to get entries for larger moves, especially when those larger moves keep happening just kind of around news headlines that are very unpredictable. Yep, 9:45 and 10 a.m. we got news. Exactly. So I always tend to let the first 5 to 15 minutes develop. At least the first 5. I generally like to let the first 15 minutes develop. And that's a little tricky when we have news at 9:45 and 10, high impact news, because I also don't like entering trades like right before news events and stuff like that. I will talk about the NASDAQ a little bit here while we watch this kind of opening action. I'm gonna stay kind of zoomed out here a little bit. We'll talk about the NASDAQ. So we were seeing relative weakness on the NASDAQ as it broke down. However, saw a pretty aggressive bounce there. So do the daily chart. Right, so still kind of relatively weak. Pull this up. You can see this is that channel that I was talking about on ES, but you can see how it was accelerating to the downside a lot more on the NASDAQ. Here's some prior lows down there. We took those out. We're bouncing, but we're nowhere near really the highs of this channel like we were, or like we are on ES right now, right? So key spot that I'm watching out for here on the NASDAQ is this area around this basing period, which I have a key level drawn right here as well, right? So this is something, if ES rejects the top of that channel and NQ, also rejects kind of more in the middle of this channel, but it's not a very clean channel, kind of supply zone here, where we based and then sold off from aggressively. So here's the 9:30 bell. So I'll drop that in the chat as well, just a higher time picture. I didn't have time to go through analysis on NQ with you guys as well here, but just for reference, that's kind of a key supply zone that I'm watching. Now, it would be equally important if this kind of fills in and buyers are able to keep, steam breaking through there. That would be equally important information. So what I'm watching here, this blue line is my anchored VWAP. I like to use anchored VWAPs. I do have just a regular VWAP on my footprint chart, as well as the 20 EMA. 20 EMA actually just crossed over the VWAP. So a lot of buying coming back in here right off the bat. But again, a lot of buying right up into, a supply zone, top of this channel, and the market's really downtrending overall. So it's tough for me to look to play long up here at these highs. How long did it take you before you felt consistently confident in your edge? A couple years. I've been trading, day trading, and with order flow trading, tape reading since like 2020, 2021. A couple years to really feel confident and consistent. But I mean, that was built already on the back of, more swing trading and higher time frame trading, since like 2016, before I got more into day trading. So it's not, it can be, but it's really not a get rich quick thing that a lot of people will sell you the idea of. It's a very high skill profession, and it takes a long time to really develop, one, the skills, and two, just the experience of understanding different market conditions, understanding different phases and themes that the market goes through, and how to adapt to different ones, right? So you really got to build experience over time, and your skill set, and also there's a lot of interpersonal skills that go along with it. That's patience and discipline and psychology is a huge aspect of trading, and just getting to know yourself, like, and what works for you or what doesn't. Truthfully, it's a very difficult game, and all of those different aspects, you have to have experience and skill set at reading the market with a specific strategy that has a quantifiable edge, really, and also the interpersonal skills, and all of those things have to be working together. And if any one of them is out of whack, you will not be successful in trading. So important to really have all of those things together. Try something here. So we'll see what happens on this rally up here. It's not really at a place that I'm looking to go long. We'll see what develops, though. What's a major mistake you see beginners make with order flow? I would say over analyzing things, looking at it at a microscope at non-key locations in the market. I think people start to develop some skill at reading the order flow, which can be very powerful. But then I think it's a temptation to start over analyzing things under a microscope at non-key locations and start over trading and blasting off trades, just because you think you see absorption one time at one place, and you end up just over analyzing and over trading. Good questions, though. Good questions. Did price just sweep a level? I don't have much of a level up here. We had this little consolidation area kind of around 66.20 in the pre-market back at like 8:45. So a little bit of a consolidation area here. Legacy asked a question, do you only trade the New York session? Primarily, yeah. You know, I went through years of where I pretty much traded all day, all the sessions, at least 9 a.m. to 4 p.m., 9:30 to 4. So I've gotten a lot of experience trading pretty much all day. Not Asia and overnight. I don't really trade that. Never really have. But pre-market, I used to trade. So I used to trade between like 5 a.m. and 8 a.m. often. I also traded, you know, from 9:30 to 4 during the regular hours. And I found specifically I liked trading the morning session between 9:30 and 11. There's just the best volatility and opportunity there, right? And the more experience and the more skill I got, I found it just wasn't worth the mental capital of spending so many more hours and just focusing on that time frame. And then for the afternoon, then I often look at like probably between 1:30 and 3:30, but specifically kind of around 2:30 after lunch. Can see a lot of afternoon reversals or continuations then. I don't trade that so much anymore. I just got too many other things to work on. But I do sometimes, especially if there's a lot of volatility, a lot of opportunities, and there's higher impact news coming out in the afternoon, then I will look at it. What does your daily routine look like outside of trading? It's a very important part of my trading process overall to have a good pre-market routine and post-trading routine. For me, you know, that's getting up early, typically like around 5, start reading and going through some analysis and charts for the day. And then I get exercise and daylight. Running for me is a big part of my pre-market prep. And then having a good game plan and analysis of kind of the overall market conditions and setups that are in play for the day. So generally speaking, you know, early wake up, you know, reading, avoiding things that kind of increase dopamine spikes, avoiding early screen time, get daylight and exercise, and good nutrition and hydration before coming into the screens for the day. And I often, you know, meditate briefly before kind of starting the trading session. Those are all key kind of foundational elements for me kind of coming into the start of every day. Legacy said you feel like you're just a better trader during the London. Just feels less pressure and cleaner moves. Yeah, it, you know, it just depends on what works for you, man. That everyone's different, so don't take what I'm saying for me and try to force yourself into that. The market goes through periods often that I see where it's like we do get, you know, kind of cleaner, better moves in the overnight session. Just looking at price action, you can just see very clean, clear setups. And then we have periods where it's very choppy, you know, during the New York Open session, right? And then sometimes it's reverse a lot. Sometimes we go through phases where the market's choppy and balanced overnight often. And then during the day, we have nice, clean directional moves, right? So I'd say the different trading sessions kind of have their own behaviors that they go through. And it's kind of important to get to know the typical like volatility that you look to trade behavior, depending on the instrument and the time, or at least the session time. So starting to see some aggressive selling step in up here. I liked how the speed of that increased. We popped just over that little pre-market high there up into the 64.20s. We do have news coming out though in 5 minutes. So it makes these sessions tough when we come right into these kind of key areas that I'm watching. So let me circle back here. Give you guys a quick view of my 15-minute chart. So this is that area where we saw in the volume profile that large volume basing period. right? So looking at that, those lows where I have this marked to up into this trend line, right, which is marking the top of that channel that we've been in on the daily chart. And you can see, so basically inside this box that I drew here is I'm kind of watching out for resistance. It's tough for me to chase a long up here, right? Because the market is downtrending in this channel overall. So I'm more looking for exhaustion from buyers in here to take short. But, you know, it's tough when we're popping into this area, you know, right into 9:45 news. I find that a little tricky for me personally. Give me 1 second, guys. I'm going to step out for 1 minute before this news comes in. I'm not going to trade this anyway until after the news. So give me 1 second. I'll be right back. All right, what happened? Sorry, my kids are fighting over a toy. I'm back. Looks like didn't miss anything. We saw that selling start hitting up here. We dumped back a little bit from 66.25s into VWAP down here. Still kind of just, you know, since 9 a.m. up and down here, kind of around VWAP in this 20 EMA. So here's the 9:45 news coming out. We have more at 10 a.m. though. Still very kind of mindful we could see this just kind of balance out here. Take a look at the volume profile now. Right, so this is that area that we talked about up here, potential supply rejection area. Kind of seeing this balance out here a bit. Pretty even between the value area high, value area low, and point of control here. We got this area on the break, prior highs, a lot of volume here, point of control here from yesterday. And then we got this area down here of this low volume node down here. Let me scroll this over so we can see price. Right, so kind of key spots here. I'm still kind of waiting and watching to see what develops here, right? Do we kind of just continue to kind of mean revert around this area here today? Or, you know, do we see another pop fail like I talked about for supply rejection up there? Kind of already got that a little bit, but didn't quite get up there. Do we break under here strongly? We could go retest that low volume node, right? So a couple scenarios that I'm watching out for here. Again, really just focused on staying very patient here until I see something really quality set up. Looking for quality, not quantity right now. Matt Syverston asked, how do you decide when not to take a trade, even if you see an imbalance or absorption? I mean, I see imbalances and absorption all the time, and I don't take a trade, right? That's just one piece of information to me. I have very specific trade setups that I look for. Yes, I'm a discretionary trader. Yes, I'm an order flow trader, tape reader. But I have very kind of specific trade setups around different context, location, and confirmations that I look for. Order flow patterns and confirmations that I look for at specific areas, right? So there are very specific things that I look for. 90% of the time, price is just moving up and down. Yeah, I see, you know, aggression, I see absorption at certain spots, and I see imbalances at certain spots. That doesn't mean I'm blasting off trades every time I see that. So on this rally up here into these highs, again, this was kind of the bottom of that zone that I talked about, like that 66.20s to 40s-ish area. You can see it as we popped into this morning on that opening drive. Look at all these offers that appeared up here on the heat map. You see these dark red spots? These are passive sellers that popped in up here, right? So they filled and absorbed all these aggressive buyers up here in this range. You can see that? Problem was that happened, you know, I may have been looking to short that at that location up there. The problem for me is it happened like just minutes before this 9:45 high impact news. So we got the trade set up that I was looking for, but it happened just like minutes before the 9:45 news, and I wasn't really interested in jumping in a trade minutes before the news. So you know, that was just a no trade for me, even though I saw the absorption up here and we got a nice selling reaction from up there. It was at the location up there. It's just, I don't like to jump into trades, especially in the first 15 minutes right before high impact news comes out. So the next thing that I'm watching, we got these lows down here towards the lows of potentially a more balanced range forming up here. Right, so if we kind of look overall, it wouldn't totally surprise me to see the market just stay kind of balanced here. One, yes, we have this news coming out, but remember, you know, we have this Trump speech tonight, so the market may kind of balance out here, kind of waiting to hear what that's about. right? So we got a volume tail up there at the highs, kind of dwindling volume at the lows, right? So we see the value area is 70%. Got the point of control near the middle here. So I'm just I'm watching to see what develops here. If we get a break outside of this, I'll certainly adapt in that. But one of the scenarios that I'm watching out for in this range, just given that we got a lot of upside pressure, but we're also rejecting right at that supply zone up here, and the market may be just kind of waiting for that Trump speech tonight, right? So maybe we'll see. If we do break down, like I said, eyes on this low volume node around that 6,500. Only thing about that level is that it's right in the middle of that daily channel that we've talked about. Right, so pretty much all the setups that I've talked about are still in play. If we pop and fail up here, that one aligns with the supply zone rejection up here, top of that channel rejection. It also aligns with fading a balance area high, right? So that would align with that up there. For multiple confluences, that would probably be what I like best. If we break out of here, that would be new information, and we continue higher and we'll adapt, right? That seems less likely unless there's a major news driver, but it's possible. And if we reject and break down out of here, right, that would be new information as well, right? So if we see a lot of weakness and we break out of this zone here, especially if we get weakness that breaks under here as well, I don't see much stopping us from retesting this area, right? So we're pretty much still just, aside from this one little pop here that I missed, just wasn't a tradable time for me, we're still just kind of in the middle of this kind of balance range that's forming here. Got a volume tail up here at the highs, less volume down here at the lows. Kind of still, for the most part, look at the last 3 30-minute candles have pretty much traded just all inside this balance range that's kind of forming here. Not going to stay in there forever. Do we stay in here all morning or not? I don't know. We'll see. I'm just watching to see. We got more news coming out at 10 a.m. in just 7 minutes, and that could definitely get us out of this range, and that's something to watch out for if we do. Or it could accelerate us to one of the extremes of the range and then we fail and revert. On a headline tweet driven market like now, what would you suggest? Smaller size, wider stop, and not holding trade for a long time. Tendra, yeah, that's kind of what I've been doing. I've kind of stayed with reduced position size as I adapted to the change in market conditions since February. Staying very patient for higher time frame levels, and then using them mostly for kind of base hit scalps and not trying to catch like the whole daily range. A lot of these bigger moves have been happening on news where I'm just not in it. Like sometimes that'll happen and you're just already in a trade based on technicals, and that's great. Like that home run just kind of happens and you're just in the right place at the right time. That's great. But I don't go up to bat every morning with the mindset of like trying to catch one of these home runs off a news event that I can't predict. Good morning, Go Harali. Welcome in. Good to see you in here as well. I think the market is also really kind of digesting like constant conflicting information about what's going on with Iran. Trump says one thing, Iran says something else. There's still bombs going off. The Strait of Hormuz is not open. So I think it's the market is kind of digesting constant conflicting things. At least that's how I view it right now. Matt, really appreciate your pre-market analysis. As with that, I'm able to match and integrate it with my own plan, and it's improving your analysis. Awesome, Karen. That's the whole point here. Fantastic. My big issue is whenever I draw levels or zones, market reacts 2 to 3 ticks away from it and I miss the trades. What do you suggest and resolve that? I'm not so for me, I draw levels and zones as an area of interest. And then, I'm really watching the order flow, and that's where my trade comes from. Yeah, I want it to be at my level of interest, but I'm not going to be like, we're 2 or 3 ticks away and I'm not taking the trade. To me, it's more important to be like, okay, what's the auction doing around here? Do I see confirmations that I usually repeat and look for on the auction in real time on the order flow? So I'm not so rigid in terms of like the price action level or something like that. It's just an area of interest for me to watch the order flow around, and that's where my actual trade execution comes from. So if you're trading a different strategy, I don't know how to answer that for you, but for me, it's coming up with a key area of interest, and usually that's a combination of like technical analysis, volume profiles, and order flow analysis. And my trade execution is really comes from reading the auction in real time, reading the order flow in real time. So if it's like 2 or 3 ticks off from the level that I have on my chart, that doesn't matter so much to me. I'll still probably take the trade if I see the right confirmations on the order flow and things like that. So back at this anchored VWAP level here, a lot of bids kind of appearing here. I don't know if you guys see that on the heat map here. We see the bids appearing, or not bids, sorry, offers appearing, which is passive sellers right here, which is interesting. If we kind of hold these lower highs here, it's just it could get flipped completely either way here in 2 minutes when the news comes out. But I'm just observing how we're kind of, one, we're oscillating here around this anchored VWAP level, and 2, we're setting up potentially several lower highs here at this resistance area. The problem is, as far as location, is 1, we're just in the middle of this balanced volume area, which is pretty much between like 6630 and 6600, really 6590s. So we're right dead smack in the middle of a balance range as far as I'm concerned. And we got news coming out in 1 minute. So not really a place that I'm looking to execute a trade right now. But just for context, I'm just kind of viewing how we're potentially setting up some lower highs right here with some weaker buying. And I'm seeing some passive sellers stepping in. So the market could sell off from this, or if there's a strong buying reaction to the news, we could just blast through it. Who knows? So we'll see what sets up here. We'll see what sets up here. Good questions though, guys. Keep them coming. Remember, great questions in the chat. 1, it leads to more valuable information being dropped for you guys. And 2, for those participating in the chat that are asking good questions, may be selected for our giveaways today. So CCF Ninja asked a good question. On the volume profile, do you look at the extended trading hours or the cash session? I look at the volume profiles of the whole day. So for me, it's more important to look at the volume profiles for the whole day where everyone is priced in. I'm not like only looking at the volume. Now, intraday, as I'm looking at the volume profiles, if you notice here on my bookmap chart, so one on a screen of mine, I have these 30-minute charts with the volume profile of the whole day. Okay. And then 2 on my, where I'm actually looking at my analysis for executing trades. 1, I have the session volume profile here, which is just the volume profile since 9:30. This clears at 9:30. And then I have the chart volume profile. So if I zoom in, this chart volume profile is showing me the volume profile just of what's on my screen here, right? If I zoom out, it's going to look more like the session volume profile, right? So for my intraday analysis for trades, one, I'm looking at the order flow in here, but then I also have volume profiles of just the session that we're in right now. For my overall analysis on levels and stuff, I'm looking at whole day volume profiles. And then I'll show you on my footprint chart here where I'm looking at executing trades as well. Similarly to I'm zoomed way out here on my footprint chart, but I have the cumulative delta for each bar, each 5-point footprint bar on ES, and then I have the session volume profile over here, right? So the answer to your question is both, but intraday, I'm looking at just the session volume profile for around my order flow analysis for trade entries. For my overall analysis for key levels and market context, I'm looking at the whole day volume profiles. And you can see on the session volume profile, look how balanced this is. We got the 20 EMA and VWAP both here chilling in the middle of this balance range. And this is why I'm saying this is like a don't touch it area for me right now. I don't see any reason to get involved with the market in the middle of this. And congratulations, CCFX Ninja, you've won the Apex Trader Funding Challenge. So congratulations on asking a great question that helps everyone learn. VX has come off a lot the last couple days. Crude is staying pretty elevated. It's up near 100 still. It's kind of flattened out the last couple days. So what's interesting is the market is rallying, like it's expecting the Iran stuff to be over, but crude has not dropped like it thinks the Iran stuff is over. So crude is saying this stuff ain't over. The ES and that NASDAQ and the S&P are trying to rally like this thing is over, and might be getting ahead of itself up here. What's a red flag that tells you to stay out of a trade? So if we're coming up to, a level or something where I have a game plan and I'm looking, say I'm looking to go short at a certain level, but then on the order flow, I see more confirmations that would tell me, it's not like if I'm looking for exhaustion from buyers, right, at a top where I'm looking for a reversal. But we come into that and I do not see exhaustion from buyers. I see large aggressive buying continuing to drive price up, and I'm not seeing exhaustion, I'm not seeing absorption or anything like that, then that would be a red flag. Basically, if I'm looking at the order flow and I'm seeing confirmations that would tell me to go long, then just because we're at a level that I was looking to potentially short in my game plan, I'm not going to do that, because if I'm seeing, basically confirmations from the other side that I would like to long, that would be a red flag for me to not take that trade. Yes, IW0N999 asked, when in a balance range like today, do you prefer to fade the move? Yeah, when we go into a very balanced period, we typically see multiple mean reversions off the extremes before we get a true breakout. So I'm always first looking to fade the extremes. All right, so we can talk about this for a little bit because we're kind of in no man's land for me right here until I see something else develop. All right, let me kind of zoom out on my volume profiles here. So just purely like for context purposes, when I'm looking at volume profiles and kind of doing analysis, one, if the market is downtrending, we typically will see wavier volume profile patterns, and volume is being transacted lower, right? And so that just occurs with drop, base periods, drop, base periods, drop. We're having drop, base, drop. The market's downtrending, right? So that's one type of market condition. And another, right, when the market's very balanced and we have more of a bell curve volume distribution, and that could be short term, either within a downtrend or at an extreme. But in the near term, when we go into a balanced condition, we typically see multiple mean reversions around the point of control before we either get continuation or a reversal from there. So when in the near term, when the market is balanced, my favorite play is to fade the extremes and look just for scalps. I don't try to catch the absolute bottom, right? I like to identify trap participants and aggressive participants starting to move the other way, right? But I look for the mean reversions at the earliest. Typically, I get confirmations much quicker than you would on a candle chart. And right, so I look for that move, right? So I look to identify confirmations here before you see anything on a candle chart. And then at the earliest point where I have solid confirmations, I like to take the trade, and I don't like to get too greedy with it, right? The highest probability move is just that back to kind of the middle of the range. Sometimes we blast through there and it's just, your lucky day, and, you hold and hit the other side, but I don't always expect that. Tendra said, I'm stuck in the break-even phase for months right now. What do you suggest I focus on improving, technical or psychological? Have you ever had this phase before? And how do you get out of it? That's a good question, and there's a lot to it. For one, I don't really know specifically what you're struggling with, if there is areas, but I don't think you realize when you are able to trade in a break-even phase, you are so close to actually being very, very profitable. And it usually is just tightening up your execution a little bit, tightening up your rules, and eliminating some bad days, right? So the easiest thing to do is keep your strategy. Don't try to reinvent the wheel and fix technical things. If you're trading break even, there's some edge there, right? Because that's already decently hard to do. So typically you want to just tighten up and maybe have more filters for things that are lower probability, either conditions that are lower probability for the setups that you look for. It is really beneficial if you track what's going on with a tool like TradeZella. So check out the discount code there if you don't already have that, but add tags to track the different market conditions that you're executing your trade in, what type of level. Maybe you start finding this specific trade that I'm working on, I try to take it everywhere, but it works really well at prior day highs and lows. It doesn't work so well at supply and demand zones, right? So then you start only taking it at prior day lows and higher day highs, and you start following that, and all of a sudden your break-even strategy starts making money, right? So tracking that kind of stuff is very valuable. And so I would say focus on one, tracking so you have good data and what improvements you need to make. Or two, right, it could be psychological if you are actually trading really well and really profitably and you just have occasional blow-ups that take you back to break even, right, because you don't follow your rules or whatever, right? Then that's a psychological problem. You probably maybe are focused on doing too much too fast, and you need to expand the time horizon in your mind of what you're looking to accomplish, right? A lot of times that comes from a desire to win every day, all the time, right now. And you need to focus on what I always say, which is win slow and suck less, right? Focus on winning over the long term and focus on sucking less in the near term, which means eliminating those top 1 to 10% of the mistakes you make, eliminating the blow-ups, right? And you can adapt and make small tweaks to your trading, right, from a technical perspective. So it's tough to answer that for you because I don't know your data and specifically for you, but I can tell you that if you start tracking really well the setups that you're looking for, and focus on just eliminating things that are not working as well, right? Maybe filter out some of your executions that are lower probability, I would say find like the 10% of your worst trades and see if there's a theme as far as the location or the context in the market that was going on. Maybe those 10% of trades often occurred around high impact, high volatility news. Maybe you shouldn't trade around that, something like that. Or maybe it's a certain level that you're trading. Maybe it works really well off supply and demand zones, not other types of locations, right? But those are different things for you to think about and track. But if you're trading break even, especially for an extended period of time, likely you're very close. It also could be just market conditions overall, right? So you may find you have edge when the market is uptrending and your trade setups that you're looking for work really well, but the market's sideways and downtrending right now, and so you're struggling. Like you're finding some setups, but overall, right, it's not as positive of expectancy as if the market was in a different condition. So also try to track the different setups that you're using and whether the market is balanced, uptrending or downtrending. And you may find that certain setups that you look for work really well in certain market conditions and don't work very well in other market conditions, right? But those are all things that you need to track over time. So the goal of this game is to survive long enough to be able to track all those things and make those adjustments so you can, get to the point of performing well in different conditions, different setups, things like that. You just started journaling in TradeZella and adapting to it, never journaled before. If you've never journaled before and you're already trading break even, that's the answer for you, my friend. Track all the stuff, all the data, and then you'll have really good things that you'll know, not just guessing, you'll know exactly different tweaks you need to make. Absolutely, Tendra. Good question. So we are watching the grass grow here. We are still oscillating around this VWAP area. Still don't have a trade location for me. I'm just watching for the extremes to hit here. Ableismeal 685 asks, how much do you love trading? I do love trading. I do love the markets. I got into trading wanting to just make money fast, obviously, like most of us do. But I do really love, it's like I have a background in engineering, right? I've always thrived off like puzzle solving, problem solving, things like that. And the markets are like an endless game to me, where there's always new information to figure out. There's always new things to adapt to. It's like an endless puzzle. So it's very interesting to me. And I'm also a very competitive person. I like sports and I'm very competitive. And right, this is like my sport now, right? I'm too old and unskilled enough to be in professional athlete sport. But this is a professional sport that I can't compete in. So I think it's fun in terms of the competitive, not necessarily like competing with the market or anyone else, but just me competing with myself to be as good as I can be. And it's very driving to continue to improve yourself. So there's a lot of different aspects to it that I don't really like. One, the problem solving. Two, the competitive spirit that I have already. So that can help you or hurt you, but you got to have a competitive spirit for sure. You have to be competitive, not about like winning an outcome. You have to be competitive about like not a short-term outcome. You don't want to be competitive about being green every day, because that's not a reasonable expectation. You want to be competitive about improving yourself all the time and being competitive, about following your system over time, things like that, to win in the long run, right? Not in the short term, right? Trading like a marathon, not a sprint. Yeah, absolutely. Yeah, I just recently ran a marathon and an ultra marathon too. What's one thing you wish you knew when you first started with order flow? It takes time and experience. Like, don't rush the process, right? You definitely, you develop more and more, and you start to see things almost like a spidey sense. And, you're not going to probably not learn just like one little pattern, one little quick trick, and all of a sudden you're printing millions, right? It doesn't really work like that. You just learn more and more over time, and you learn how to just read the market. Don't try to like fixate on one thing, like learn how to read absorption, right? Don't fixate on one thing. Focus on just understanding who the other participants are in the market, right? Understanding what they're doing and how they're positioning themselves, right? Put yourself in the other player's shoes, right? And then once you understand that, then you start to understand what the market is really doing, right? So I would say abstractly, learn about the order flow and the market auction and think about it from the perspective of other participants. What are they doing, right? Is there a lot of effort and no reward? Is there a lot of effort and there's a lot of reward? Reward being price movement, effort being, volume and size of participants. And once you just understand the market auction for what it is, and, you start to understand, there's a lot of aggressive buying up here at these highs. There's a lot of effort, right? Let me put myself in the position of these buyers, right? Everybody's buying aggressively up here, but price is not moving higher. What's going on? Somebody's passively selling to them, right? If the market starts to reverse hard from there, if I was a buyer up there at those highs, I'm going to be feeling some pain. I'm going to want to stop out. What if I have to stop out of this position? What do I have to do? I have to sell. So the market's probably going to reverse even harder from there, right? So that you start to understand those things, and then you start to see it play out. Yeah, Blazer asked, one day, can you make a video for understanding auction market theory? Make sure you subscribe on my channel. I'm going to be recently releasing a whole series on the different order flow trading stuff. First thing I do when I start my trading session is go through higher time frame analysis, blank charts. I go redo all of my analysis, and go through key levels, context, what's the bigger picture overall, what's the fundamental theme driving major driving factors in the market. Has there been any changes or updates to that, right? I want to first identify and make sure I'm not putting myself in front of the bus, right? I want to make sure that what I'm doing makes sense with the overall higher time frame analysis and analysis of like the major themes that are going on in the market. Because I don't want to come into the day, looking at lower time frame charts and order flow under a microscope and finding myself swimming against the current. So I want to see which direction the currents are moving in the ocean and where are good points that I can just swim along with it. Legacy asked, what's your routine before the session? I already talked about that earlier, but generally speaking, I like to get exercise in daylight. I like to read, eat, and drink. So I exercise minimum before I'm getting into the charts, reading, meditating, and getting proper food and hydration. Any of those things are out of whack. I know, I frequently, many of my worst days in trading is when one of those things is out of whack, and it leads to poor performance on my part. And congratulations, Slayer18777. You've won the Alpha Capital Group Challenge. Congratulations. Somebody said, is Trump speaking right now? I don't know. So this was one of the scenarios that I was watching out for, is the market to just be kind of balanced here today, kind of awaiting some more news specifically from Trump. We've got him scheduled to speak later today. We got kind of conflicting information coming out between Trump and Iran and what the resolution of that will be. So not too much. We do have crude oil inventories news coming out in 9 minutes. That could potentially spark some volatility because oil, the market is very sensitive to oil supply right now, especially if you trade crude. Watch out for that in 9 minutes. But other than that, we're pretty much just hanging out around this anchored VWAP level here, guys. Right in the middle of this balance range. Kind of already saw this developing this morning, and that's why I said, I was watching out for it. Let me go back. And you can see how volume is kind of tapered off at the highs and the lows here. Not a lot of excitement in the middle. Point of control right in the middle of this range. Kind of just hanging out around it. If nothing else, what I don't want to do is really be involved in executing trades right in the middle of it. Maybe if we get out to the extremes and we start to mean revert or, break out, that would be something. A lot of aggressive buying just came into the highs up here. But tough location for me to chase a breakout. Coming up to the end of the initial balance here, first hour, we're still pretty much holding this one price swing that occurred from 9:39 right before news right into 9:49. So we had that 1 10-minute price swing, and since then we've just been hanging out right in the middle of it. Right here. Don't need this line anymore. Yeah, so overall, that's kind of the picture, right? We had that one price swing there, which was actually, zooming out even more, was just right in the middle of kind of that earlier price swing from that news pop, right? So here's a visual for us in case you needed to be reminded why we're chilling here, is because we're just kind of forming a pennant here, getting choppier and smaller. So, tactical patience. Gil, yeah, I would. If you trade 5 or 6 trades a day, I would still journal all of them. Maybe shorten your notes so you're not, spending hours, writing multiple paragraphs out on each trade. But yeah, each trade should be tagged and everything so you can track it. You should have at least, some minimal notes for each trade. Yeah, I would journal all of them. I would not, if you're that high frequency and you can't, I would at least journal the day overall and a quick note on, each of the trades. But for most people, if you're not already like consistently profitable and stuff, then I would say less is more, right? You don't need more trades. You probably need more quality trades. I think that is probably what most people need. And then, as you find you have a strong edge and consistently profitable, then you'll already know what you need to journal and what is important for you to track. And 2, you can start maybe increasing size and frequency based on that. But I would probably say for the most part, for most people, it's important to focus on less is more, track good data, take, higher quality trades and journal it and track it, right? So you can extend the time horizon of you figuring out what works and not, trading too much, potentially hurting yourself fast before, running out of capital before you have enough time to figure out what's working well. Yeah, Trader John said, I find journaling losing trades are more important. Yeah, you definitely, every loss should be a learning lesson, right? And not that way you extract value out of it even when you lose, right? And there's good, losing is part of the game, right? That's not ever going to be avoidable, right? So it's important to track, but it's important to track if it's a good loss, like you followed your rules, followed your system, followed your entry criteria, but you just took a loss on it. That's fine. That's valuable information, because then you can track over time things that you may need to tweak, whether your entry model or your trade management, whatever, stops, whatever. It's important to track all that over time. Not that you want to make, changes to your trading strategy every time you take a trade. That's not what I'm saying. But when there's consistent themes over time that you can track, dozens and hundreds of trades, then that starts to give you really valuable insights that you can, make tweaks to and adapt to. And that's what helps you become a profitable, consistent trader. Tendra said, for the past 75 days, 80% of the time, ES single break one side only of the initial balance or regular trading hours. 17.33% of the time it double breaks. I would say, I don't have stats to give you overall, but I would say that is very aligned with typical behavior on the S&P. I would say just over the last so many years that I've been trading the S&P, a long time, I would say that's very accurate. I would say it's a very few percentage of the time we break both sides of prior days or both sides of a range. We either break one side and kind of reject back into the middle, or, we break one side and continue, right? But I would say very few times we break both sides of a prior day range, or even maybe initial balance. Initial balance probably breaks both sides more frequently than prior day highs and lows break both in one day. That's not frequent. So that, I don't have stats in front of me or anything. I'd have to consult some AI to look at charts, but I can tell you that sounds right. I would say, as far as typical daily ranges. So we are hanging out in the pennant, guys. I think it's a cash morning for me, folks. I think it's a cash morning for me. Market is telling me, have a good day. Go do something else. Location is very important. If my location is supply zone, what will I look for in terms of confirmation? A couple different things, right? So that's a good question. We can talk about that here, right? Because we have a supply zone up here. So I'll tell you what I would be watching for, right? So one, we're forming kind of a balance range just under kind of the supply zone. And looking at the charts, we had that supply zone that I was watching out for kind of around, what was it, like 66.37 to 40.50-ish area up here, which we spiked into on the news there and rejected, right? But typically there's a couple things. One, we might rally into there and we might see a lot of aggressive buying kind of not failing to move price higher, right? So that would be like absorption, right? So that's one. I don't like to just fade a directional move and just because we get into supply, just because we see absorption, right? But if we see that over a period of time and then we start to see aggressive selling reject off of it, and then we see a pop back into it with weaker positive delta, weaker buying, then that starts to look like an entry trigger for me, right? For a supply zone rejection. The other thing that we may see is we may rally up into that supply zone and we just see kind of exhaustion, kind of weaker buying popping into those highs. And then we may see large aggressive sellers stepping in, right? That are like immediately rejecting, right? Especially if that follows with, lower high pop, right? So I want to see big participants, either absorption and exhaustion or aggressive sellers defending, right? But it's important to note that absorption alone doesn't move price. Aggressive participants move price. Absorption and passive players can kind of act like guardrails that resist price's movement and kind of guide it in a direction. But the aggressive market orders that hit the passive sellers, passive buyers are the ones that move price direction. So you want to just be careful just spotting like absorption, because that's just kind of step one, or just exhaustion, right? Because we need to see aggressive participants coming in to show us they're taking control of the directional shift in price, right? So if you try to front run that, and I do sometimes, more so when I'm fading balance ranges, but if you try to front run that, that's a recipe to take a lot of small losses, and you may eventually sometimes catch big hits off massive tops and massive bottoms, but you'll likely be nickeled and dimed to death trying to top tick a move and just repeatedly getting stopped out, right? So you want to see absorption over a period of time, 15 minutes, 30 minutes, whatever, it's relative, right? And you want to see aggressive participants start the shift, right? And they may come in and they may drop price and leave like a low volume node that we then look to short a pop into, right? An intraday low volume area where they're really aggressive. Or we may just pop and see exhaustion and see large aggressive players stepping in and we just join them for the move. But you want to see both pairs, and you just want to remember, right? It's best and most A+ to see both. See trapped participants at a supply zone and large aggressive, sellers starting that rejection. We don't want to be the first seller stepping in with our couple retail trader contracts trying to stop the whole move from rallying up through there, because sometimes supply zones just break, right? If there's a massive shift in the theme of the market, fundamentals, whatever, the supply zone is just a technical area. It may be that the market just rallies into there and keeps rallying, right? So we need to see the reaction after, right? We don't want to be the first one trying to catch it. At least for me, as a tape reader, as a short-term trader, timing is super critical for entries, and I don't want to be the first one trying to catch it. I need to let the big players play their hand and me identify that early and be able to go with them before everybody else sees it on a candle chart. Abis, good question. Congratulations. You've won the 3-month TradeZella subscription as well. Hope that helps you. Make sure you track your data and track those supplies and rejections that you're talking about, and track the different confirmations and things that you use. Right? Hopefully that information helps you as far as pairing some order flow analysis and confirmations. Now we're starting to see some aggressive selling coming in here. But again, location is kind of just middle of the range here for me. But we are seeing some heavier, larger, aggressive selling come in. Look at that. So this is an example of what I was talking about. One, look at the weaker buying on this last pop here. Right, so if we look at these aggressive buyers as absorption and then this pop as exhaustion, that's starting to show us some confluences here. And now aggressive sellers are starting to make the move. Now I'm more interested in shorting a pop. I would say the only thing about this though is the location is not super ideal. And I may have been kind of late to this as I was talking. But that's okay. Overall, location is very important, and we're still kind of right in the middle of this range, right? We just barely popped to the highs of this range right here, 24s, not really quite at the extremes that I'd really want to trade. This is another thing that I like to do, just to bear in mind, is on my footprint chart, I just kind of zoom all the way out like this. Take a look at the volume profile over here. Look at this 20 EMA, which is a good indicator of intraday control, and VWAP basically overlapped here, and the market's just chopping around them, right? So overall, we had one little pop at the highs there, and now we dropped to the lows. But overall, like, this range looks like a big old, just don't touch it area. It's not good quality. Now, if we break it, that may be more interesting. Yeah. All right, guys. I think that's going to be a wrap for me coming into kind of the end of the session that I like to really watch here around 10:45, 11. If it's super flat and choppy like this is typically when I'd say, okay, it's time to preserve mental capital and not burn myself out. So that's going to be a wrap for me, guys. I hope you guys learned something today, if nothing else. And make sure you check out Chart Academy, get signed up there. There's going to be a huge release of free courses and informations from the team there. And make sure you check out the Chart Fanatics Discord. Again, you can always ping me in there if you guys have questions. And I will see you guys on Friday. Thanks for tuning in. Remember, patience is key here, guys. Capital preservation. Don't force things that are not in the cards, right? Remember, the market is like giving us ingredients, and we're the chef. It's our job to make something that aligns with the ingredients. Today, sometimes making something that aligns with the ingredients means just don't make something. The ingredients suck, right? Not trying to make a disgusting meal out of something that doesn't present an opportunity, right? If it does and it changes and we get some new ingredients, then we'll see if there's an opportunity. But right now, there's not for me. All right, have a good day, guys. I'll see you later. Peace.